the audio is working. Okay, let me just check. Yeah, should be okay. So please let me know if you can't hear me. So it's NFP Day again, and we've got a very obviously interesting day ahead of us. Simply the fact that we've got. Or we've had this announcement overnight that the president has actually tested positive for coronavirus, along with his wife and aide Hope Hicks. So that's obviously had a bit of a spike on the markets this morning. Let's zoom this up a bit. This one here. We moved. Initially the dollar was on bid. Now we went weaker. So euro went down here, testing 117 earlier. Actually, let's bring that up. This morning under 117, then we rallied, and then we come back down. So again, it's really just sort of pivoting through this 1725 zone so far today, and that was yesterday as well here on the euro. At the moment, we've got obviously expectation of about less than 1 million this time for NFP, but still a hefty 900,000 for the headline. Unemployment, again, expected to show a bit of a decline. Participation rate, again, an area that many market participants are really watching closely. So all to play for as we continue to gather the economic data. Yesterday's data was actually overall sort of biased to the upside. The ADP number on Wednesday was better. The weekly claims also became better than expected, finally finishing off September, the first one in October, as a positive. Last 3 weeks had been missing expectations, so we'll see what the numbers look like in a minute or so. So unemployment rate 8.2%. The higher U6 for 15.4%, so ticking up that higher rate, and that participation rate back to about 61.5%. So earnings also 0.2%. Again, there's lots of there's jobs disappearing, the better paid jobs disappearing, lots of furloughs going on, or layoffs in the United States. Disney announced 28,000 jobs losses across the board globally. The airline industry announced 30,000 yesterday. American Airlines and United announced 30,000 layoffs. Dow Chemicals earlier in the week, Shell in the UK as well, in the US 9,000, Continental, and then H&M, the Swedish retail store, talking about closing 250. That doesn't affect it affects the United States to an extent, but really that was a global number of shops closing. So we'll see what this number looks like later on. So let's just have a quick run through the data. So pound rallied really well. It fell and then it rallied really aggressively this morning. We were back under this pivot area where we've been moving through 128.65 for most of this week. We rallied on the announcement that Mr. Johnson will meet Van Loon to discuss where we are, or where the UK and the EU are with regard to the trade deals. But then a member of the cabinet, one of the business secretary, talked about sort of downplaying the talks tomorrow. So it's really going to go down to the wire, as was expected, this trade talk, if there is a deal. And even really, my take on it, for what it's worth, is the trade deal. Will it be worth the paper it's written on, given it's been crammed into this very, very short period of time, right at the end. So the 15th of October, the deadline that Johnson put on himself, is looming, less than 2 weeks away, and they're due to talk all the way into that 15th and then perhaps beyond it, because the end of the month really is a drop-dead date if the EU have got to have a chance to actually vote on it. So sterling, 129.43 at the moment. Aussie, pivoting around 71.50. The yen, massive boost there. Big demand on the yen. We were down to 105 as that news broke, and this morning about the president testing positive. We're back to 105.19, so significant buys at 105 typically for dollar yen. Same with down at 104 is where we were before. So let's see what these numbers do. somebody's saying Trump tested positive. I'm sure it will affect the market. It certainly did affect the market, my friend. That's what this number was here. The initial news was that Hope Hicks had just tested positive, and the president and his wife were going into quarantine, and then it broke that the president himself had actually tested positive as well. So we'll see how that takes it. Obviously, there's a question. His opponents have always questioned the state of his health. He's admitted himself he's a wee bit overweight, but very, very healthy. So a man of 74 contracting this is obviously quite significant, given how older people have taken it. But there's still a very, very high, or very, very low, I should say, mortality rate, even for 70 pluses in the United States with this virus. So depending how obviously badly he gets it. Remember, Prime Minister Johnson in the UK had it. It was quite bad. He was in the ICU. Bolsonaro, the other key populist, he's had it quite badly as well in Brazil. So what to say? What can I say? Anyway, let's have a look. Ramzan, gold's going up. Gold's had a good couple of sessions. We rallied yesterday back into this 119 or 1900 area. Can't get over 1920, and we're at 1913. So let's have a look at the numbers as they're coming out. Spinning around here, this connection's not great. So actually, it's not out yet, as it was still a minute or so to go. So we'll get back to them when they actually break. But gold, is back into this 1900, 1920 zone. If we go to the daily time frame, Ramzan, I don't know what time frame you're trading on. I'll zoom that up a bit. You can see we fell out of that quite significantly last week, moved down, and earlier this week we were testing this 1850. We tested it three times intraday there. And then we turned around on Monday we turned around. So we've had Monday, Tuesday, Wednesday, Thursday, relatively positive. Dip on Wednesday, Thursday up, strong day. And then today we're back at over 1900. So we closed over 1900 for the first time in 1, 2, 3, 4, 5, 6, 7 days. I haven't fallen out of that support channel. So we'll see where we go with gold. Gold's perhaps ticking up, but it's really broken down. So it's still biased to the downside on this higher daily time frame, because the 200 period, the 20 period there sits at 1916. So 1916, 1915, sort of round number area. For gold to break through on a daily time frame will perhaps then test 1945 and back into this higher channel here. But at the moment, we're still biased to the downside, sitting under the 20-day moving average on gold. My friend Ramzan saying he thinks it's going to go up. Shakir just asking for some gold now. So that's where we are today on the daily time frame. We come down the time frames. The 4-hour triggered sort of higher here over its 20 period moving average here on the 28th at 8 o'clock in the evening, and that's been moving up ever since from the 28th through the end of the month and into the new month. And the 1-hour time frame, as the news breaks, is ticking up as well to the upside. So let's have a look at the data as it's just fallen. I've lost it now. Where are we gone? Right. So let's have a look. Earnings miss. Participation rate is down only just a tick. The headline number is quite a significant miss. It's coming at 661,000. So that's a significant miss. Remember, last month it was 1.489 million. That's been rounded up from 1.371. So last month has been upgraded to 1.489. So nearly virtually 1.5 million. This month was expected around the 850,000, 900,000. It's actually a significant miss. We're coming in at 661,000. So again, not great news for the administration. And earnings are down to 4.9%, although it's holding up quite healthily. And last month has been revised down to 4.6% from 4.7%. So that's a downward revision. The headline number has been revised upwards from last time, and the average hourly earnings for the month have been marked down. That's the key one I've been looking at through all these NFP numbers, and we've got a miss on the earnings number. So it's biased to the downside for the first time in a while. Unemployment rate is better than expected. The longer term one, the U6 one that I look at, 12.8%. It was expected to come in at 15.4%. And the headline unemployment rate is back now under 8% at 7.9%. So that's another positive tick. So unemployment has come down. The number of jobs created is less than expected, and the participation rate is less than expected. So again, it's this airing this weaker jobs numbers, lower end jobs being created, and earnings not pushing through. So it's a lower, weaker sort of jobs area. So this hospitality area that we keep talking about, I haven't got all the details here, but that's becoming key as we move into this very full-on election season now. And obviously, markets very uncertain about how it's going to play out now, potentially. Not trying to get too far ahead of themselves with regard to the situation with the president, obviously. So let's have a look. What we're saying, Carlton, would sterling pick up because of Trump testing positive at 129.60? Don't get the market. Remember, guys, markets tend to, when we look back at it, they tend to overreact all the time, either to the upside or to the downside. So they need for the data to fill in. Obviously, the move, for instance, let's have a look at this. It's a good example of what I'm talking about this morning here with sterling. We went down on the news because dollar got a bid, safe haven bid, uncertainty. Gold goes up, dollar goes up, yen goes up. Swiss franc goes up to a lesser extent as well. So dollar got that bid, and then we've turned around. We had this surprising news that Johnson was going to meet Van der Leyen. We're into this final end game of the negotiations for a trade deal. Remember, it was at the last minute they got the actual agreement deal, which the UK are pulling out of, or threatening to pull out of with the bill they're trying to put through Parliament. So we had this rally. So sterling's holding up. Clearly today, R1 there is a big resistance there, 129.67. The news is out already. It's been absorbed by the market about the president. He's still, he's a fit bloke. He's still saying he's not ill. Presumably he's still going to carry on with his his diary and whatever, but obviously not seeing people. He obviously can't go out campaign. He can't leave the White House. He's in quarantine with his wife. But as he said in the tweet, he was very, very upbeat, and that will probably continue, if not get more focus, given that he's not moving around. He's got less to concentrate on in a sense. So sterling certainly perhaps to the upside on the 1 hour, the 4 hour. It's sort of ticking up, but it's really not moving out. A big fat resistance area, that one key 130 on all charts there. The 4 hour, you can see it very clearly. A bit more busy here on the daily time because this is the 1 hour chart. We had this big sell-off, remember, during September for sterling when we were testing 134 and even 135 intraday, but we came down very aggressively. It all came back, retraced, then went back down. Now we're retraced. So we're basically in this sort of 127.50 to 130 channel in the higher time frame. So the daily time frame really wants to breach that key 130 area if we're going to move any higher, Carlton, my friend. Okay, well, that's enough. We've got lots of stuff going on. Benno, we just talked about gold. I'll come back to gold if others aren't reacting. So let's just have a quick reaction to what the dollar's done with regard. This is sterling on the 5-minute chart. So sterling's ticked up. So the dollar's weakened a bit on that weaker than expected headline NFP number, 600,000. It's remember the initial weekly jobs claim. So that number yesterday, though it was better than expected, but it was still 7,000. It was still a huge number, and that was on a weekly basis. This NFP number, this non-farm payroll number, for the week, for the two. Remember when they calculate it as well? It's before there's these layoffs at the end of the month and the end of the quarter were all announced. These Disney, Shell, Dow Chemical ones, but they were all announced. So that count was taken before then. So 600,000. So there's more new claims in the week this week than there has been in the whole month creating jobs. 600,000. So it's a week. The story of the weaker, stumbling recovery continues to roll out. So dollar again may come under pressure in the higher time frames immediately in this first few minutes since the announcements come out. It's certainly sort of ticking down there. Let's have a look. What else was people asking about? Oh my, I'm not sure. Thanks, a really strong support and resistance. Yes, Carlton, there is. I mean, again, if you just go back to that, what we're talking about, the daily pound, I think is what you're talking about. It's a big fat line there, yeah. Remember, markets like big round numbers as well. So 130, 120, 125, zeros and fives continually come into support and resistance areas on in markets. And you can see here, clearly on the daily, we're sort of just bouncing that. So, I mean, there's 250 pips available there from top to bottom. So don't be afraid to, don't be afraid to take. So here on this particular strategy here, this crossing EMA strategy, it being short all the way down here. It was still short. Actually, it closed out. So it went short here on the 7th of September. Then it closed out that short there on the 28th, if we were taking it. And then it's looking to, technically it went long here on Wednesday. It only just breached the 20 period, but you see the blue line crossing over the yellow line. It's a weak long position. But again, you can see your stop loss would have been down, should be down there somewhere, that 127.50. The ATR, it's 130 pips on a daily time frame, typically on the daily time frame for cable. So, two lots of that takes you beyond this 130 headline. So see how that's going. So that's, I say, triggered long down the daily, and it's up again today at 129.65. So got to get through 130 first, certainly, and then obviously the next one above that is 131 as far as round numbers are concerned. What's being traded? I don't understand what you mean, my friend. Everything gets traded, my friend. Everything gets traded on all time frames. But let's just have a look what's moving as far as NFP is concerned. So not a great deal, to be honest. I think the news of Trump testing positive as more of a market move than the NFP has been today. So if we look down Euro 5 minute, it's wasn't a great deal. Let's just put in where's the number come out? No, it's 20 days. So it's gone shorter. Let's make that just so you can see what I'm talking about. So it's literally come out in the last 5 minutes. So here we've moved down. So euros sunk. So in dollars, become more in demand here is the immediate reaction as euro comes off this 200 in the 5 minute chart, this 200 period, 200 moving average there. So we're moving down in this 5 minute time frame, 15 minute time frame again, looking to move down. Yen sort of ticked up. This is the 1 hour for yen. Again, we've got the 5 minute relatively well. From a weak position, it's sort of ticked up a tad, but running out of steam already at the moment. But ticking up over the that's a pivot point there. Where are we? There we go. 5. So 105.25. That's our S2 level, a big sellout. So it's ticking up. Dollar ticking up on the data basically. So dollar. That's 1 hour. Sterling. We looked at Aussie. Still stuck around 71.50. So not much movement in the Antipodeans back to 171.50. CAD, no data from CAD today. That's next week. Employment data from Canada. So again, another one that's capped here around its 200 hour moving average today. Hasn't gone up with that, and again it's ticking. If I go down to the lower time frames, it's ticking, sort of tricking down there in that 5 minutes since the news comes. So it's been relatively dollar positive. The weak number that might be in anticipation of pushing the Fed to actually obviously not going to move rates, but move the Fed, put more pressure on the politicians to get some sort of stimulus package together. Dollar's sort of ticking up, but it's not the move perhaps you would anticipate for a normal NFP in October. And remember, this is the last big employment data point for NFP day as far as it's concerned before the election. So the market has more jitters to worry about than the monthly jobs numbers with the president testing positive for the COVID virus. So let me just go through those numbers again. So average hourly earnings for the month was down, missing expectations by one tick, came at 0.1%. Last month was also revised down from 0.4% to 0.3%. Participation rate, that's a key number. Last month it was 61.7%. It's big slip, quite a significant slip to 61.4%. This month, also a tick lower than the 61.5%. So earnings have come down as participation rate come down as well. Unemployment, on the other hand, the longer term, the wider view of unemployment is actually much better than expected. It's coming at 12.8%. That's the U6 unemployment rate from 15.4% and from 14.2% last time. So it was expected to tick up a bit. It's actually better than last time. and as opposed to being worse than as expected, and much better than expected. The headline unemployment number, the one that everybody will be looking at, 7.9%. Obviously, the administration will be saying, look, unemployment's back down again, under 8%. It's coming at 7.9%, and again, better than expected, and a whole half of 1% better than last time as well. The main headline, though, is obviously the thing that's going to grab attention. So from last month's 1.37 million, that's been brought. That's actually been revised up to 1.489, so virtually 1.5 million. But this month is much weaker than expected, nearly 200,000 weaker than expected, at 661,000 from expectations of 850,000. So again, that may get revised obviously up next month as well. The consensus, the census jobs obviously spiked up last month as well. So interesting one. See how that transpires. So, but generally, it's a bit of a non-mover, really, isn't it? Look at this. Let's have a look at. Let's go back to this dollar CAD, for instance. So, as the news broke, we started to move down, but it's just continuing the trend it was on today, basically. Oh, sorry, it was moving down. Now it's moved back up a tad. That's sort of reversing the trend it was on today, but not perhaps the significant move. You sometimes the significant volatility you can get with normal non-farm payroll days, and a lot of that has to do with, I say, the fundamental news that came out earlier with regarding the president. Yusuf, US is a buy, I guess. Well, it seems to be airing on that way as far as the market's reacting. Dollar CAD here, for instance, the 15-minute chart's up. But again, you see, it was down to test a key level, 133, so you may expect some sort of buyers down here on that level. But again, it's all to do with the time frames you're trading, Yusuf, my friend. So here, 15-minute is remaining sort of short, but it's come back up, may close out. Obviously, we're just 15 minutes after the non-farm payroll. So, yeah, there you go. Big, strong candle engulfing there. So that looks like that might be moving up to test R1 at least, and possibly the day high there at 133.25, going to yesterday's day high as well. What is gold analysis, Right, we did gold before, but let's go back to gold. So you asking about gold. So gold remains, let's start from the higher time frame. Gold remains out of its, or back into its support channel on its daily time frame. So if we close today, a positive close for gold today would be over 1917. The reason I say that is that's where that 20-day moving average is. Obviously a bit of a hike from where we are now at 1908. But it's sort of airing, it's looking like it's trying to move up. Remember, we moved down quite significantly on the 21st as we broke out of that support channel I've been talking about for most of August and most of September, for over a month. And we broke under we closed under 2019 there on the 21st. Then we moved down quite aggressively for 3 days, testing the fourth day, that 1850. We tested it for 3 days, 1850, and then we turned around here Monday it was, wasn't it? We turned around, quite a good day for gold, turned around Monday. Tuesday up, Wednesday down, Thursday good strong day over the 5 and the 9 moving averages. Still haven't crossed though here on the daily time frame, and Thursday is also Friday is also looking quite positive as we start the new month. So down into the end of the month for gold. So we've been all the way up here at 2076, and we closed the month for gold traders off its floor at 1850, but it's only just at 1895. So starting to move up on the daily time frame. The weekly still remains relatively strong, but tested this 20-week moving average. So we tested it last week, and this week we've tested it, but come off it. So it's still looking positive on the weekly. The monthly remains well bid. So monthly higher, weekly higher, daily starting to move up again this week. We'll see where we close today. 4-hour turned long here on the 28th. So a couple of days, 3 or 4 days ago, the 4-hour chart turned up from this 1850 low. You can see it quite nicely demonstrated that 1850 low. Boing, boing, and off we go. That's gone long, and that remains long to the upside on the 4-hour time frame. The 1-hour time frame, obviously more volatile, but again being trend. That's at 28th on the 1-hour time frame as well, also triggering long there on that 1 hour, and that's continued to there, short, gone long again there, through there, then gone long there, long, and then long again. So the 1 hour remains long from this morning at 9 o'clock, and it's ticking up, but got resistance today at that 1960. So a close over 1970 would take this higher. Okay. Bangit says, Yoda, only trade with unfilled orders. Okay, fair enough. That's a technique. So lots of people have a look at that technique. Marrero, US for gold. There we go. That's my gold analysis, my friend. Unless you want a short time frame, say they're all now long, the 1 hour, the 4 hour, and the daily are sort of ticking up. If you look tighter time frame or a lower time frame than that, let me know. So gold ticking up. Let me have a look at oil, because oil's had a very, very big shake. I don't know how many oil traders are in here, but it's a key commodity. We had this massive shakeout yesterday. So yesterday we were up here at 14.40. Earlier in the week we've been as high as testing 40.90, 40.86. But a huge sell-off yesterday. This move here, that's near over where we 17.30. It was over 7.6%, 7.5% fall for US oil over the last 24 hours, and we've tested under $37 this morning as well. So that trend remains very much set in. That 1 hour trade would have that system there would have triggered you short there yesterday at 12 o'clock, and you all the way up there, and you're still short basically if you're trading this strategy, because we still haven't closed back over that yellow line, that 9-period EMA. So the 20 period, 9 period, 5 period, all nicely trending lower and moving to the downside. Under S1 today, under key 38, that had been a key support area, $38, and testing $37 itself. That Fibonacci level there sits at 36 from, must be a weekly chart, I guess. Where's that Fibonacci from? I don't know where that's from. That's from a long time ago. So yeah, big old shakeout there for the oil market. Any of you oil traders know exactly about right to oil. Abraham, what you're asking? Euro. Well, it was last time we looked at it. Dollar was ticking up against the euro, so we'd come off this 17.25 area. We'd rejected the 200 period. Haven't tracked lower into 1700. Tested yesterday, bounced off it. Into the 200 outfit, down, didn't test 7, up a bit, but again, the 200 period held this morning, and then the big news, zoom it up, hang on, I'm looking at this 15-minute chart, so I'm looking at the wrong time frame. I need to go to the hour chart, so again, been trekking down, so, this is the 1 hour moving lower, 17.00, 1700 key level, again, a big psychological level. The 200-day moving average, chaps, is ladies, sits there at 16.92. So will that be tested later today? We're only 10 or 15 pips away from that key support level. So that's a big S2 becomes a key player today. Haven't already breached S1. Look at that. We've been under it for 1, 2, 3, 4 hours. We've been under S1. So again, teetering lower. The 15-minute, classic little tweezer top there. See that? Rejecting the 200 period there on the 15-minute chart up. And so, and the 1 hour was a bit choppy, but that would have taken you short there, and that's run you all the way down quite nicely for 20, 30 pips into 1700 itself. 20 pips plus there on 15-minute chart on euro. So that's moving short again, but will it breach under 1700? That's being played with and tested at the moment. See how the cash market's open. Speaking of cash markets, let's have a look at the equity markets. This is the USA 500 on the 1 hour time frame. So what's this been going again? This has got weaker overnight from the announcement. So we had ticked up. We closed up here around 380 yesterday, 3,380. It's the USA 500, the world's most important stock market. We're moving down. Obviously, a big surprise from the White House about the president. So we're down here at 3,320 at the moment and moving lower. So we're under our again another one that's crossed under its 20 period earlier into the close yesterday, and it's moved down. That blue line there is the 50 period moving average, and the orange line that 200 period. So breached those two key moving averages as well today. So that's our resistance now today, intraday. 3375. The pivot point for the day from yesterday before the big announcement was 3375. So they're the key levels: 3338, the 37, and 3375. Two key levels there, pivot point for today for equity markets. We've already tested S3 once. We've tried to do it again an hour or so ago. So 3310 is the next low, but we may have some buyers at the cash open, but it's still 35 minutes away. So any more questions, guys? Any more particular assets? Have I missed anything from anybody? Gold. We've had a look at gold. Dollar low. Gold actually went the other way, didn't it? Gold. We've had a look at old. Okay. No more questions. Let me just check if I can see other questions. I'm not sure if I'm getting everybody's questions here. Always freaks me out a bit. So 666,000. The bank that was closest was the Canadian Imperial Bank. CIBC was expecting 650,000. We came in at 66,000. The other key analysts that were on the mark was Raymond James at 650,000 as well. So they were two of the analysts that were closest to today's NFP headline number. So let's have a look. If I've got any more questions on Facebook, because I'm not sure I've got them all here. They all look like YouTube questions, but let me just have a quick look for you. Right, there's lots of questions here from Facebook, which I can't say. Gold icon we just talked about. It seems the market is not reacting in terms of volatility. Zen, yes, you're right. It didn't, as you're right. 7 minutes ago. Yeah, I'm absolutely with you as well. Devin is asking about oil. I hope I answered your question, Devin. Can't see all the other comments actually. Let's have a look. See all your comments. Never mind, see if I can see them all. Right, there's lots more suddenly popped up. The vagrancies of technology, ladies and gentlemen. The vagrancy of technology. So last question was from Murray. We talked about Euro. Rebels asking about Euro New Zealand. Well, there's an interesting one. That's not one I look at very often, my friend. I'm going to have to open a new chart for that. Euro. Sure I'll have it here. Euro New Zealand. Did you ask me about this before? Euro New Zealand. Where is it? Euro New Zealand. I can't see it. Let me go to my Euro files for profile. Euro New Zealand Rebel. How often do you trade this, my friend? What time frame are you trading this one on? Where are you? You're here. Rebel. Any particular time frame, my friend? Let's have a look. Euro New Zealand. What's occurring? So let's zoom this up a bit. We've been down from May, June. We were rallied up here to 1.80. I remember this one now. Yeah, and we've sort of been trocking sideways, buys to the upside really for September. That's as exciting as that pair is getting. So we got key support Rebel here on the daily time frame, where the 200-day moving average in the S2 sits at the moment. So 1.75. 96, so call that 1.76 in round numbers. So 1.76 is our sort of support area through here, which we've been over, not particularly, but we've been sort of pivoting through. We rallied through it. Euro got some bid there on that 21st of September, so that was the day we came back out of our 200 support zone. It looks like we're heading back down to it because we've rallied up. Actually, quite a tight range, that, isn't it? There we go. So tight range. The last week or so, we haven't been able to get over 178. So we're tracked between 178 and 176. So we've got a 200 pip range there. The ATR is 120. So that's a daily range, really. We're tracking between the top. At the moment, we're under the 50-day moving average as of the close of the month. And yesterday, we went down significantly under the 50-day moving average and the 20-day moving average. And we're tracking into the S1 there at 176.27 or 176.28. We're at 176.75 now. So we bounced off that a bit, but big support there at 176. So bias to the downside, but really going sideways in that daily time frame, Raoul, my friend. Lower time frames, probably doing a similar sort of thing. There we go. That's our top of the channel there, that 178. Bottom of the channel here at 176. So, sell orders coming in up here and down we go. I haven't actually tracked as low as 176 today on the so far on the 4 hour, but again, 4 hour been short since that break there under the 20 period and the 50 period. So again, tripping lower, and the 1 hour time frame a bit more action there, breaking those barriers, but again tripping lower, and again a bit more channel bound. So the 1 hour is very much tracking between S1 today at 176.27, which we just said we saw bounced off, and the top at the 50 hour moving average and the R1 level there at 176.99. I'll call it 177. Really, that's our range today. No, not only today, but today. Sorry, we moved down yesterday. So that's really range bound and moving up and down. So be careful with that one, my friend. Lampuso, Kiwi. Let's have a look at Kiwi. I forgot to bring a glass of water with me, so my voice is going. So I apologise, ladies and gentlemen. Kiwi. Rebel, actually, Rebel, I've just seen your 4 hour request. Let me just go back to your. Let me just do that in detail. I don't know if I explained that in detail enough for you. What we were talking about euro, weren't we? That 1 hour certainly range bound. Did you get my comments on the 4 hour? If not, we'll go back to it, my friend. Sorry, I've just seen it's just popped up. Yes, you did. Thanks, man. Oh, thank you, Manners. Thank you for being here. It's not a problem. Where was I? I was going to the euro for Lampuso. Let's have a look. Euro. Where's the euro gone? Not the euro. Kiwi. I know what I mean. I was looking for the Kiwi. Don't worry. Kiwi. That's the daily. Let's go back to the 1 hour. So again, Lampuso. As far as let's start at the top. Daily. It's really Kiwi's holding up relatively well. Small nation, very much tied to Australia and China as far as exports are concerned. Obviously, tourism is a big factor. That's more or less knocked on its head completely out of the COVID crisis, but also a huge soft agricultural product suppliers. So, and a key carry trade currency as well. So here we are. We'd broken 66, 65, and 67. During September, and we tracked down here along with other currencies as the dollar improved towards the end of September for that week. So we moved down from our plus 67 plus into 65.30, and then we've rallied. So it's a bit of a round bottom there, which is not great. But again, so that remains short because we're not back over the 20-day moving average yet, over 66. But 66, the round number. Obviously, a key level there on the daily time frame. Let's zoom that in a bit more. You can see we rallied up. We're sort of holding. See how this is the 66 level here. Dot 66. Sort of holding quite well. It's not, it doesn't want to move below it, above it. Doesn't want to move much down below and test 65 again. Didn't really want to move up. So it's compressing. It's compressing. So again, there may be some major breakout from here. But remember, again, if I go to the weekly time frame, you can see. Remember, we were down here at multi-year lows when we went down here to 55, under 55. So it's been a strong recovery for the Australian dollar and the New Zealand dollar during the pandemic in this sort of middle half of the year, these middle 6 months, March through to September. So it's recovered really well. But as you can see here, this is quite a good example of what I'm talking about. Now, 200 period moving average on the weekly time frame is a big thick wall, which for 1, 2, 3, 4, 5, 6 weeks now at 67.35 we haven't been able to break over. So it gave up the ghost quite significantly last week and moved down quite significantly. But 66 is still holding a bit. So here on the weekly time frame, we're testing lower. We did that last week and we've done it again already this week, testing this support at 65.35, and that seems to be holding for now. Going into the weekend, And so it's up here somewhere here, that 65.35. So key support on the daily is obviously around 65. The 200-day moving average sits there at 64.60. So it's sort of pushing up, but needs to break really over that 20-day moving average. It's going to move up, my friend. Gold entry point. Well, depends on your. You put this on twice, Lero. I don't know what time frame you're talking about, and what your system. There's all sorts of entries and exit points, but really, as I say, on this strategy, this is waiting for this 20-period moving average to break. 1960, 1917, 1918 at the end of the day. The 4-hour strategy is already long, and it's just tracking high, and you're trailing your stop loss up as it goes. And again, we did close over there, but long again there. So we haven't closed under the yellow for a few candles now. So that's tracking higher, but it's got that key resistance there on the 4-hour. But that would mean an entry on the daily on that time. Really, Malera, it's all to do with your time frame, my friend. Where to get in, where to get out. Obviously, on the 1-hour, it's a bit different. We've been in, we've been out. That would have gone long. And again, 15-minute on this same strategy, it would have been long earlier this morning. It's rallied up. You'd have got out there. It looks to go short. Didn't. Just sideways. Not doing anything. And it's still really not doing anything the last 15 minutes. So that goes back to somebody's comment over on Facebook about the relatively little action on NFP. Look, this is a good example. This is the 15-minute time frame for one of the most volatile assets, which is gold. And where's NFP on here? Well, you can't really tell, can you? There's no big, massive candle. In fact, it's there, isn't it? There, that's the 330 one. So we did go up there and down there, but we ended up completely flat. Not a great deal of action on the gold market. Although we went from 1906, 1905 to 19. So it was a $5 move, 500 pip move. But as far as the candle is concerned now, as a 15-minute trade, it's not really telling you anything, is it? So. There's no need to be trading all the time. Have a system, trade your system, accept your losing trades, and there will be lots of them, and accept your winning trades and bag them, bank them. Let the winning trades run and keep the losing trades small. It's an old cliche, but it keeps you in business, my friend. It really does. Now I can't see all the other comments here. There's obviously lots and lots of comments. Why can't I see them anymore? On Facebook, it's supposed to be 14 messages here. Oh well. Something when our sharing software isn't sharing our main Facebook page for some reason. So I turned on. Who was the last question? It was Rebel saying thank you. That's no problem. Alonso saying thank you. Very good. Okay. Well, if there's no more questions, let's just go back to the main charts and see what's going on again. So, what's not gone on is the case maybe. And I think it's more of a case of what's not gone on really. Euro continues to weaken, but as we said earlier, a few minutes ago, nothing really changed. Yeah, we're bouncing off 1700, aren't we? Unsurprisingly. This is the 5-minute chart for Euro. So it's been quite nicely short from the announcement. Tracked lower, there's 20-odd pips there, 25 pips on that offer there as it went to 17. Yen, on the other hand, this is the 1-hour chart, so it doesn't look the same. There you go. That's the 5-minute yen chart, and it's really not doing a great deal at all, is it really? It's sort of tipping higher. So there's still lots of demand for the yen here at the beginning of the month with that news out of America. So 105.25. Moving high, nothing to get too excited about that. See the Japanese into their weekend now. Sterling, similar sort of setup, still etched to the upside, ironically. So sterling having a strongish day. The 5-minute chart starting to move down back to test 129 from this rolling top here, around 29.40, back down to test 29. So it's a relatively dollar strongish NFP, but very reduced volatility for October NFP data. Kiwi finally given up. This is what the 5-minute charts on last 20 minutes while we've been talking. It's given up that 71.50 handle we were talking about, and again slipping lower. So 71.25 is probably next support. Have a look. Time frame. Yeah, it's a bit lower than that, isn't it? 71. Yeah, 21.27 is where S2 is, and we're just here playing with the 200-hour moving average for NFP time, basically under 71.50, but sort of tripping to the downside. Swissy, I'm talking about Swissy. Swiss franc's had a right old move recently. Continues to be a good trader. Again, another one is bashing into a key level. Very contained moves here today, even for something like the Swiss franc. Very, very contained there at R1 at 92.10. It's not as far as it wants to go. 92 is our support, and 200 hour there at 92.03. So yeah, not a great deal going on with the Swiss franc either. So it's a bit of a muted jobs day today, unlike many other days. So you don't want to see that, do you? Unlike some other NFP days. But let's just leave us with the euro testing 17. So see where we go from here for the rest of the day. So Danville, hack, gold buying or selling. It depends on your system. I can't tell you what to do, my friend. You should have a strategy and a system to give you an indication of what to do and what time frame to create your targets. As I said, let's finish with gold. People seem obsessed with gold today. Gold on the daily time frame for this strategy needs to break to go long. Would need to break that 20-day moving average there at 1917. Well, it's 1917.50. That's at the R1 level today on the daily time frame. The 4-hour remains long, so the 4-hour chart gold remains long. Tarek. So again, depending on what time frame you hold, but it's been long for a while now. It's tested, got out there, went in long there. It's still moving up. Resistance is that daily resistance we talked about for the 4-hour time frame as well. So at 19.15, a bit lower, and the 1-hour time frame was long from yesterday. Into close, went short this morning into S1, and then that big surprise with the news breaking of the president testing positive for COVID. Gold got a big rally up, but stalled there at that 1960 level. So technically getting rid of putting the news aside. We've got a sideways action for gold for a long time, for over a month here from this big sell-off. Remember, we went all the way to 2,076 an ounce for gold at the beginning of the summer, beginning of August. Here at the beginning of October, we're down here testing 18.50. So it was a huge difference. $50 move really. 18.50 has been tested as low, but the channel we were in that's broken out is that the floor at 1900. Here, this blue line here, and the support above that at 1920. So we've broken out of that, and we're just now, yesterday, getting back into that over that 19 level. So this is either a bit of a retrace for the next leg down, or as I said, we need to break back over this 20-day moving average for perhaps a move back up into the fatter channel as well, and then a move to 1995 potentially to the upside. So Tarek, my friend, it's all about your time frames. Tarek. Joseph, hello. You're at the webinars this week, weren't you? I remember your name, Joseph Hessian. Update on pound against the yen. Let's have a look at pound yen, one of the most volatile of all currency pairs of the majors, certainly the guppy. So lots of volatility today, as you might expect, yesterday and today, all to do with positive news for both of these pairs. Yen was in demand because of the uncertainty about that's thrown into the markets because of the president testing positive for COVID, the United States President Mr. Trump. So we pushed a new low. Interestingly, here, look, this is the 1-hour chart, Joseph. So our low here on Wednesday was here. The hourly candles couldn't close between 135.34. Although yesterday was a tad lower at 135. No, it wasn't. It was actually a tad high, wasn't it? 135. So anyway, My storage is broken down there. Anyway, 2 lows tested, and now the point is we've broken below that low, that 135.35 area. So we're into S1 today, 135.20 now, tested for 3 hours, and then recovered. And that was the recovery in sterling. This particular pair was all to do with the news that Prime Minister Johnson was going to meet the head of the European Commission tomorrow. Big surprise. To see where they're going to go from here. But that was then cooled. The positivity around sterling on the back of that was cooled with some members of the cabinet saying, look, there's still, we want a deal. They call it about a tunnel deal, i.e. the heads talk, because Johnson himself hasn't actually been involved in the Brexit negotiations since, I think, June or July, so it's a long time. He's been down at, Barnier and the UK's chief negotiator, whose name's just gone out of my head for a minute, has been driving things. And they're sticking around key things, level playing fields here, the euro, fisheries. The UK are really, really hanging on to this fisheries area. Obviously, they're an island, and fisheries is issue. But as far as jobs are concerned, there's only, I'm saying only, it sounds a bit disparaging, but there's 12,000 jobs left in UK fisheries. So even if there's lots of jobs came back, even if they doubled, 100% gain for UK jobs in the fishery industry, it's still only 12,000 jobs, and yet shops are chains are talking about 6,000 jobs going in one particular retail chain. So I don't know, focusing perhaps on the minutiae, which the bigger picture is the hundreds, tens of thousands of jobs. Thousands of jobs that are going because of the pandemic, and then you add the uncertainty about Brexit and the uncertainty of the trade deal and what the situation is for UK with trade with the wider world. Having come out of the EU, that's a much more of a cloudy issue, so I would be concerned. But anyway, so we'll see how it goes. These things always go to the wire. History shows us that they will probably have a deal. Whether the deal they agree is worth any money that they write it down on, we shall see. It's a lot of pain and heartache. 4 years after that historic vote. So anyway, Joseph, cable. So sterling against the yen. So we've got resistance today there at 136. It's held relatively well, and then tricking down so far today. So that's ran out of steam. We're back pivoting through 136. 4-hour time frame still sort of airing to the upside, even with this big bid on the yen. So sterling still is looking to recover, but again, pivoting through 136, needs to break higher. Very, very choppy. We got resistance at 136.87, top of the Bollinger Band on the R1 level there, and S1 sits above 135 at 135.20. So again, moved up, but sort of saddled. We can't break out of 136 with any continued momentum, and doesn't want to break below 134. You see very choppy, the oscillators there, the stocks, which are quite choppy anyway here, but you see the MACD there just moving up, but not a great deal of holding. Sorry, let's just move that. So over here, as we start the end of September, it's moving up quite nice, but then sort of the histogram there losing. Still above zero, but starting to edge to the downside. So we really need to break the top of the Bollinger Band. 136.75, we're going to go any higher there in the 4-hour time frame, and break below S1 if we're going to move down with any significance below 135. So it's 100 odd pips either way on that one. On the 4-hour time frame, as far as the daily intraday 1 hour, it's very, very choppy there in the 1-hour time frame. That's one we were looking at before. And higher still on the daily time frame. We've had a big short on this strategy here from the 7th of September. That moved all the way down, from all the way up here at 140. We went all the way down through 136.35, under 134, and spiked to as low as 133 here as we got to the end of September. Turned around, technically closed the short there on the 28th, before the end of the month, and it's looking to try and go long here on the daily time frame. I'll zoom that up. Let me zoom that up. You can see, so we've had 1, 2, 3, 4, 5, 6 consecutive rising candles, positive candles, yesterday ran out of steam quite aggressively with a doji candle into the 200-day moving average at 136.70, and then come back and then close the day short or within that positive candle the day before. So this candle engulfed by this candle, and again today, not much action. So perhaps we've run out of steam, and perhaps we're not moving up. We haven't actually closed over the 20-day moving average. We closed below it or at it here on Wednesday. Thursday we closed back under the 20-day, and today we're maybe closing over it, but it's a very weak break if it is. But certainly the short position was closed out, not quite yet to go long. Key resistance there at 136.70 on the daily time frame for you, Joseph, my friend. Tarak, gold now buying area. Dan Burrell, I don't know what time frame you're talking about, my friend. It may have moved, I don't know. But you've got, when I'm talking about all these different time frames, you've got to wait till the time frame's up. So, for instance, today, you can't really, as an end of day trader, you can't make a decision till the day's over, till the candle's complete, because we don't know what it's going to finish. Look at yesterday on this pound yen chart. We went all the way up there. The top of the wick is there, all the way up there at 136.98. So it went to 137. We went as low as 135. 135.30, so 130 pips between top and bottom for pound yen. That's not unusual, but with the buyers and the sellers were virtually in balance yesterday. We'd run all the buying momentum over the last 6 days had petered out yesterday, and we were compressed. We opened within the day before's range, and we closed within the day before's range. So we were engulfed by this candle here, which is a relatively negative setup as well. So a rejection of higher, this wick rejecting higher prices. So, that's just started to form, that setup, that pattern setup. So Tanville, depending on the time frame, you've got to wait till the time frames are up. So I don't know what time frame you're talking about. Okay, when you're saying gold now buying area, again, it's all about the time frames that you're trading and what strategy you're trading it on. So I can't see as I say, as a 4-hour trader, you're just, you've been long from this break, this immediate break here. It got out there, got back in there, got chopped. You'd still been in because the stop loss would have been back here, would have trended higher. That might have taken you out, but we didn't close under the 9 period. We closed above it still, so that's still long. So I don't know what time frame you're talking about, my friend. Right, before I go, guys, I've been on for nearly an hour now. I've got a drink, so I apologise. I'm going to call it a day. So let's just do a quick recap. Headline, NFP was a bit of a disappointment, 661,000 from expectations of 850,000. Last month was actually lifted higher to nearly 1.5 million. 1.489 million from 1.37 million. Participation rate was disappointingly lower, and earnings in particular was a tick lower on the monthly, but the weekly, the average hourly annualized as well. Earnings in the US was also a tick lower at 4.7%, so a bit weaker. We've still got some key data. We've got the University of Michigan Consumer Sentiment Index and their inflation outlook as well. That's a key piece of data to conclude the week, along with the CFTC reports for the futures positions later on as well. So let's see if I can see any more, because I can't see any comments or questions on my Facebook. Oh, it's 27 apparently. I don't understand a lot of those comments, to be honest, gentlemen, ladies. Somebody comment about a spread. Yeah, spreads do widen during NFP, my friend. Anyway, let's just come out of that then. So there we go. Any more questions here on YouTube or other Facebook pages? Danville, very best of luck, my friend, with your gold positions. So thank you, everybody, for today's attendance, and your comments are more than welcome. I'll leave you here with the euro bouncing off 1700, having been as high as 1730 today, so not a great move. Today, what we're talking about today, is that today? Today we've been as high as 1740, so 40 pip move down for euro dollar today. So take care, everyone. We'll see you all next week, and have a great and safe weekend. All the best. Bye-bye.